Welcome back. You're watching Your Stocks. We have a next query coming in from Sita, who's written to us from Andhra Pradesh. She says she has 40 shares of Jubilant Life. She bought it at 417, so she's making money. She's been holding on for just 2 months and wants to know whether she should continue holding on or book out. What should she do at the moment? Mayuresh, Jubilant Life, making money. It doesn't seem like she has any compulsion to, take a decision to either stay or move out. And therefore, what would be the best decision for her?
No, so at the time being, Samara, I think my feeler is that she can still hold on to the stock. Now, a couple of things that she probably needs to look out for over the immediate future. One is the NCLT approval. They had actually asked for a demerger between their pharma and their LSI business. So what comes through from the NCLT side over the next few months is going to be an extremely critical re-rating trigger for the stock. The second element within their business segments itself, within pharma, specialty pharma has been doing exceedingly well. What they're probably looking at in terms of the CDMO part, I think that part is also moving along pretty well. And the expectations in terms of launches of the unique sterile products that they've got both in the US and the European markets. The remediation of both their plants are also very, very critical. LSI, the life sciences, more or less in terms of lower demand, acetic prices had come down. But largely, again, I think the specialty intermediates is extremely critical, and I think the demand should come back to a certain extent. The only concern that I probably have compared to the other pharma players is the debt on their books at 0.8 times on an FY20 annualized basis. But with expectations of more filings coming through, I think the cash flow should improve, reducing in alleviating the debt through. So yeah, she can hold on at this point.
Let's move on. We have another query. Again, this one is an interesting one because taking off from where we were talking about low price and low valuation usually being interchanged. We have Neeraj Patel, who writes to us from Surat, holds about 20,000 shares of Yes Bank. A long-term investor wants to know whether to hold or sell. He bought it at 16 odd rupees. Mayuresh, 16 rupees is when he bought it. I mean, this was perhaps the time when, most of the problems with Yes Bank, the street had understood those problems. He saw a punt, maybe he bought it, and now perhaps he's, holding it for the long term. What would you advise?
No, so I think we don't have it under the coverage right now, but what has transpired, you're absolutely right. I think with a new player coming in and a consortium coming through led by SBI, the kind of capital raise they've done, shoring up of capital adequacy at this point of time, ensuring that the advances growth come back to normal, ensuring also that the deposit degrowth that they've seen, probably has some kind of a curtailment put through with the new guys coming in. But my own sense is that the earnings recovery is going to be a very, very slow and an arduous process for a bank like Yes Bank. So my own sense is that we are probably looking at other players within the larger space itself in the Nifty pack itself. Say a stock like Ultratech, I think, is an excellent example in terms of how volume-led price growth can actually have a huge say in terms of the second half and the next financial year as well. So I'll better focus where I think the earnings outlook looks very, very good over the next few quarters.
Okay, the next query comes in from Kashish Nigam. She's written to us from Madhya Pradesh. She has 255 shares of SBI cards, which she has bought at 720. She wants to get a long-term outlook on the stock and wants to know, of course, whether she should remain invested or not. Mayuresh, she's already making a sizable profit over here. But do you think the stock is good for more? I mean, this is a market that has potential for the next many, many years.
Well, absolutely, Sumera. I think and the concerns were largely laid out after the pandemic on the asset quality issues, the moratoriums that all the financial institutions had put through, and even the card issuing companies, and what kind of a dent would it have in terms of reported numbers. But what we've seen over the last few months itself, post the pandemic, I think the numbers have started showing improvement. So the new account acquisition has actually started improving quite significantly. So in June, it stood around 180,000. It's still 60% compared to pre-COVID levels. But I think the improvement is definitely seen. Even on the asset quality front, GNP is reported are at 1.35 compared to 2.7. The provision coverage at 68.25. The cost to income ratios have gone down to 47%, and the card spends have actually increased during this lockdowns. So again, I think the kind of underwriting skills that these card players will undergo at this point of time, and the expectations of a healthy balance sheet with a very, very strong parent in terms of the distribution stroke marketing tie that they've got with the SBI network. I think it's a phenomenal story that can play out over the next few quarters. So yeah, I think definitely hold on to this.
But move on to the next query. We have a query coming in from Odisha. Ranganath Pati writes to us. holds about 700 shares of NMDC at 98 rupees odd and 920 shares of GAIL at 111. A long-term investor wants to know whether he should continue to hold or book.
Okay, Mayuresh, what would you say? NMDC, GAIL?
Oh, yes, Sumer, I think to a large extent, what you've probably seen in terms of the price increases that NMDC have taken, both in terms of fines and lumps, that should very well continue. I think the logic is pretty simple here. Steel prices are moving higher, so iron ore prices should start sustaining. And what you've probably seen in terms of price increases, I think the prices are still lower in terms of the landed cost in terms of imports, even at this juncture. The second element, obviously, is also the pellet pricing, ex-Raipur, have actually shot up over the last few months as well. So I think that becomes a huge respite for NMDC as well. The third element, obviously, is the kind of volumes that you probably are expected to see for FY21, FY22. So if you assume 30 million odd tons for both these financial years on a standalone basis, what you probably expected to see in terms of price increases taking place, curtailment on costs, and what probably happens in terms of the Nagarnath steel plant, the 3 MTPA which is coming up, and the backward integration thereof. I think there can be huge value going forward. However, the price is not suggesting that at this point of time. And therefore, I think the earnings recovery as per our methodology is still going to take time, which will get reflected in price. So you'll have to have a lot of patience for this one. Dividend yield is obviously very, very attractive at 6.5%, which goes for GAIL as well, which has transmission issues at this point of time. Specifically on the pricing part, I think the volumes are very, very good. The petchem is the sore link for GAIL. So I think earnings recovery is going to take time for both these stocks, so the investor will have to have a lot of patience.
All right, fair point there, Mayuresh. Thanks a lot for that. In fact, on that note, we'll thank both Ruchit as well as Mayuresh. And thank you for joining in, answering all our viewers' queries.